middle powers must act together because if we're not at the table, we're on the menu.
Somewhere Europe has to grow out of the mindset that Europe's problems are the world's problems, but the world's problems are not Europe's problems.
चुन चुन करके हिसाब लेना ये मेरी फितरत है.
Why should it be a problem if I'm smart enough to have multiple options? You should be admiring me.
भारत झुकने वाला भी नहीं.
The rise of India will be determined by India. It will be determined by our strength, not by the mistakes of others.
The old order is not coming back. We shouldn't mourn it. Nostalgia is not a strategy.
Guys, welcome back. If you enjoy deep analysis on geopolitics, global trade, and systems that actually run the world, make sure to like the video and subscribe to the channel. And please do go check out my book on Amazon Kindle and Amazon paperback. You can find it. It's called Emerging World Order 2025. Okay, it's a great book. Please do go purchase it, read it, and give your feedback. Okay, now let's coming to the topic. Okay, the hidden weakness of the dollar system. See, now every few weeks, what do? We hear same thing from the de-dollarization crowd, that the dollar is dying. BRICS is going to replace the dollar. Petrodollar is finished. And all it takes is one oil deal in yuan. Suddenly people start to say what? American financial power is over. Look, Iran is selling oil in yuan. When actually there is no proof of it that Iran is actually doing it. Just because Iran decides to do all that doesn't mean that it's happening, okay? Iran may have a wishful thinking. So to me, I think that's lazy analysis, honestly, okay? Because that's not how dollar system works. And that's what we are going to talk about in this video, okay? I want to once and for all explain everything to you, that what are the 4 weaknesses of the dollar system on which it depends. And if those pillars are basically gone, those weaknesses are actually gone, that's when dollar will start to crumble, okay? See, dollar does not dominate the world because people love the dollar. It has nothing to do with people. It dominates because the entire trading system is built around it. The traders, all the companies, all the businesses, imports, exports, they all love it. Why? It's because of the simplicity of it. Whatever trade they do, they make the payment, they immediately get the settlement. It's done. They don't have to sit there and wait for a month to get their money. In the trading world, 1 month is like lifetime. And if you look at the numbers, okay, let me share my slide with you real quick, okay, so that you can see the numbers, all right? So here's the thing. Look at the numbers here. What's happening? It's like around 58% of the global foreign exchange reserves are still held in dollars. Nearly 88% of all foreign exchange transactions involve the dollar. Most major commodities like oil, gas, and metals are still priced in dollar, and nearly 80% of global trade finance still runs through the dollar-based system. Now, this is not just about currency strength, okay? What I'm seeing here is a complete end-to-end system control. So if you actually want to understand whether the dollar is weakening, then stop looking at the lazy analysis and stop looking at the superficial level things and start looking at the machinery underneath. You have to look under the hood, saying that, oh, the China is liquidating $28 billion from US Treasury is not gonna cut it, guys, okay? I mean, just look at just the number I'll tell you, okay? US stock market is $60 trillion. That involves Treasury, Federal Reserve, and New York Stock Exchange, NASDAQ, all that. That's $60 trillion, guys. Okay? So if somebody cashes in $1 trillion out of it, then it's not going to do anything. It's just like you're taking out the drop from an ocean. And other thing is this, that you see, one BRICS summit does not end the dollar dominance. One local currency deal does not end dollar dominance. And one speech about de-dollarization definitely does not end the dollar domination. So the real question is, if you want dollar dominance to be over, or let's say for those who have this wishful thinking or whatever, right? Then the question really is that where are the actual weak points in the dollar system? Or how do we really say that, hey, look at these things. If these numbers start to go down, or if there is a parallel system against these things, then we can say that, yeah, dollar is going down, right? Because if those points start to break, then the story changes, right? Everything shifts. So that's exactly what we are going to break down today, okay? The 5 real weaknesses inside the dollar system that actually matter, okay? So let's get started. Let's get going. Please do like and subscribe, all right? So let's get going. See, the first weakness is payment infrastructure. The dollar dominates the global trade because most international payment still move through few things. Let me first of all share my slide so that picture is a lot clearer to you. Okay, there you go. So the dollar dominates global trade because of all the international payments moving through corresponding banking network, dollar clearing systems, United States controlled financial rails, and Society for Worldwide Interbank Financial Telecommunication Messaging Dependence. Do you know what I just said? I said SWIFT. That's what the full form of SWIFT is. Now, let me make one very important clarification here. Most people think that Society for Worldwide Interbank Financial Telecommunication, that is SWIFT, itself is the dollar system. But reality is that it's not. We all know it's a payment system. It takes messages from anything. SWIFT is mainly the messaging layer. Okay. Now it sends what it does. Okay, it sends payment instructions between banks and can handle transactions in dollars, euros, yuan, rupee, basically any currency. Why? Because it's just a message. I mean, actually, I can give you a very simple example, right? Message is, it's like you have chatting, right? What do you do in chatting? Or text message, right? Text message is also a messaging app, but the behind the scene layer is different compared to in SWIFT, okay? But at the end of the day, if there are no restrictions, then you see the text messaging, you can just send any kind of message, right? It's just a message. That's exactly what SWIFT is, just a messaging engine. It's a messaging layer. It processes any currency, it takes any transactions in dollars, any currency, you name it, okay? Now the real power is in the settlement layer. That is where participating banks come into play, especially correspondent banks and dollar clearing banks. And these are the ones that actually handle the actual cross-border payments. You have to understand all these things, all right? That so what is that cross-border payment? Let's say there is a bank in China, for example, okay? Now, bank in China and bank in America, they both have to be part of SWIFT, and they both have to be part of SWIFT if they want to trade with that country. Let's say if China wants to trade with the United States, then they have to be part of the SWIFT. Not just that. In fact, if China wants to trade with any country, they have to be part of SWIFT. More you become, more your banks become part of a bigger network or bigger messaging system, that is SWIFT in this case, more transactions you can handle, and more transaction you handle, more money you make. Is that simple, right? And this settlement layer that I talked about earlier, right now, is this settlement layer is heavily dominated by the US dollar. Said at the settlement layer, actually all the transaction happens in dollar. But at the messaging layer, it can be anything. All right. So that's why even if let's say two countries are trading with each other, okay, and neither one is America, the payment often still touches the dollar system through the settlement banks. Okay, this is why if you're using SWIFT in your currency, even in your national currency, settlement will be done in the dollar in the settlement bank. You have to understand this. Okay, this is why when countries want to trade 100% in the national currencies, they develop their own payment system, and then what they do, they link those payment systems. Now another thing is that a normal cross border payment can pass through 3 to 5 intermediary banks and take 1 to 3 business days to settle. Okay, and this is why with SWIFT all these things happen really fast. But when you have your own settlement payment system and then settlement partners or intermediary banks, then this thing takes longer. Okay, this thing takes longer. So this is why lots of countries, lots of traders actually, they hesitate in using any other payment system with all the the whole national currency trade and all that thing. Traders actually don't like it. So what does this mean? It means the US doesn't just control the currency, it controls the rails, it controls the whole entire system. So unless you bypass that rail, meaning that you come up with a mechanism where these intermediary banks no longer exist, and you come up with a system where the processing time is just few minutes or seconds or maybe an hour or two instead of 1 to 3 business days, this is not going anywhere. But if we come up with this mechanism that I just said, then that's a whole different ball game. And that's where central bank digital currencies become very important, that is CBDCs. And this is not because CBDCs themselves replace the dollar, but because linked CBD systems can bypass dollar settlement entirely. Like I said earlier, that because settlement layer is there because of the hard currency, because of the presence of the hard currency. You have to think about it, okay? You see money on your website, that number that is on your website, that's nothing. At the end of the day, what do? You go to the ATM to get your money out. That's the hard currency, right? But imagine this. If you have CBDC, digital currency, then you don't have to carry a wallet. Right? Any trader, anything doesn't have to carry wallet. You don't need bank to protect that CBDC. And when you don't need banks to protect the CBDC, then who is the settlement layer? Settlement layer is the banks. So what's going to happen? Banks will be eliminated from the scene. You eliminate the banks from the scene completely. Then the dollar-based settlement layer actually completely collapses. In fact, if you remove the banks, then any hard currency settlement layer will collapse. Not just the dollar. And this is why I said that when CBDC will be implemented, when countries will start to link their CBDC systems, like India has announced that they're going to bring in the discussion this year in the BRICS summit. They're going to discuss this thing that, hey, let's link all our CBDC systems, for the BRICS countries. They're going to do that. India and UAE have already linked their CBDC systems. So when you do that, then you don't need any settlement, any bank or participating bank or anything. You just have to connect to the central banks of each country, and you have to connect those payment systems, and you're good to go. Which means that the system that was taking 3 to 5 days for settlements, and 1 to 3 5, I mean, basically all in all, let's say a week or sometimes 2 weeks, like that, with CBDCs, all this is gonna happen really, really quickly. And now if you look into the numbers, then in pilot testing, okay, the mbridge, actually they said that mbridge processed almost 22 million in real value cross-border settlements. And this mbridge process basically involves China, Thailand, United Emirates, Hong Kong, and all that. So what does this mean? All in all, when you introduce the CBDC, it will be fewer corresponding bank, less dollar dependency, less exposure to US financial sanctions. And the moment countries can settle major trade without touching the dollar system, the first pillar of dollar dominance weakens. That's the first pillar, just one. Okay. So now let's talk about the second pillar. Okay. Now the second weakness is commodity pricing, the non-dollar energy, and commodity settlements. And this is the heart of the petrodollar system. Now let's understand the petrodollar system a little bit, okay? Even though I know lots of you probably already know, but let me explain you just in short. See, global oil trade alone is worth roughly $2 to $3 trillion per year. And for many years, most of that trade has been priced and settled in US dollars, and we know this, right? Now, let me share my slide real quick here. Okay. So, what it did is that this created a system. It's called dollar recycling. And I'm not making this up. Okay. These are not my terminologies that I'm saying. Okay. I'm using. This is a IMF terminology. Dollar recycling. Go on IMF website, you will see how dollar recycling actually works, and it has explained very neatly on IMF website. Okay, and this is actually the whole dollar recycling is a very powerful loop. Countries need oil, countries need dollars, countries hold dollar reserves, and US gains financial dominance. Why? Because countries who sell the oil in dollar, or countries who do the trade in dollar, okay, ultimately what happens is that dollar goes into US financial infrastructure or US financial systems. It is invested over there into the treasury, in the securities, into the bonds and all that. Okay, so that's how the dollar recycling works. And this is why energy matters more than the speeches about de-dollarization or the lazy analysis about the de-dollarization. Because all these commodities create automatic dollar demand. Now let's take a very good example of Iran war. What's happening here? What do you think happened? See, what happened is dollar pricing, or say oil price, was increased. Oil price was increased. It went up to 115. Right? So what exactly does that do? Now let's go back in the past a little bit. In the past, US used to manipulate its domestic market, domestic printing of the dollar in in the country by asking these the Middle Eastern countries to increase the oil prices or decrease the supply of the oil. Okay, and in either case, what was happening? The oil prices were going up, which means that the dollar that US printed, that dollar was getting utilized. How? Why? And how and why? Because US actually increased the demand, the dollar demand, by changing the supply, or by asking Saudi Arabia and all these OPEC countries to increase the price of the oil. Why? Because they control the Brent and WTI. So US would ask UK that, hey, let's increase the price of the oil now. Why? Because we have printed little too much money, now we need something. So everybody was getting the piece of the pie with this system. Okay. Now Saudi Arabia was benefited because if you understand the oil pricing, how oil pricing works, then you will understand the Saudi Arabian interest in increased oil prices. Why? Because Saudi Arabia, and most of the OPEC countries over there, okay, for them, the break-even cost, the cost that is needed to actually produce the oil, from the digging the well to taking it to the shipping container, the cargo ships or whatnot, all that cost give take $8 to $9 per barrel. That's it. That's how cheap oil is for Saudi Arabia and all the Middle Eastern countries. So now you're gonna ask this, okay, so that's fine, fair enough. So why do they sell oil in $70-$80 per barrel? It's because they take that sale, the export of oil, into account in determining their GDP. Meaning, if Saudi Arabia wants the GDP to be, say, $2 trillion, then they have to figure out how much oil should be priced at and how much oil they need to sell for their GDP for that year to be $2 trillion. Okay, so when they increase the price of the oil, then Saudi Arabia and all these Middle Eastern countries make loads and loads of money. So with the Iran war right now, actually, they may not be making money because they're not able to supply it either. But back in the day, they used to supply. Okay, so that's how they were benefiting from it. But today, what's happening is that oil prices went up. Middle East is not able to sell that much oil. They are still doing it, but it's a problem. Okay, but what's happening? What's the benefit of US with this whole thing? The benefit of US is that all the money they have printed all these years, the dollar dip that led to dollar depreciation, and then increased national debt and all that, right? So whatever the national debt is, what they're going to do with this is that, first of all, it's gonna lower the national debt. But the mechanism of national debt lowering is that bit different. But whatever extra dollar that has been printed, by doing this, they created extra demand in the market. Notice this thing with the market demand in dollar and all. So now what's happening? Whatever dollar was printed, it will be consumed. Okay, so this is why now you see that the Russians became the first country to say that, okay, we are going to sell oil in ruble. We are not going to sell oil in dollar. They walked away from it. Okay. Second country is Iran. Iran is not getting that kind of opportunity to do that, but they are still ready to do it. Okay. So the cracks are actually appearing. And China has expanded yuan settled oil contracts. But see, once again, just because China is saying the yuan settled oil contract doesn't mean that it's going to replace the petrodollar system. Why? Because there are 194 countries and China is just one country that is basically doing the trade in yuan. Now, if other 193 countries start to trade in yuan, then dollar will be replaced. Now, you see the difference here, right? You see why I always say that that just because China is trading in yuan or some other country is trading in national currency doesn't mean that you can replace it. You get the picture? So so this is why it's difficult, but cracks are appearing, right? And look at Russia. Russia now settles major part of energy exports outside the dollar system. India has used rupee, dirham, and alternative systems, right? Lots of alternative systems and structures in parts of Russian oil trade. And Saudi Arabia has started to discuss non-dollar settlement possibilities. So all this is right now still limited compared to the total global energy trade. But even if 20 to 30% of the major commodity settlement shifts outside the dollar, right? The global demand structure changes completely. Now we are talking not just about oil here. We are talking about green exchange. We are talking about gold. We are talking about um, food. We are talking about fertilizer. All those things. If the slowly and slowly, if trade starts to move away from the dollar system, then it will happen. But now you can imagine how hard that is, right? Because for us, saying all these things is easy, but for a trader, they have to change the whole entire infrastructure. Now imagine you are a trader. You will have to first of all then figure out a new bank. You have to figure out a new payment system, and then you will have to figure out a new, you will have to buy a new point of sale application, and not knowing how long that's gonna last, because all that costs money too. So for a trader, anything extra has to be accounted for, right? For you and me, it's easy to make the video and it's easy to talk about de-dollarization, but for traders, it's a problem, right? So that's how it is. Okay. So that's the second part of it. So if countries decide to move away from it slowly and slowly, at least from the energy point of view, I think that will still be something. Okay. So there is that. The third weakness is maritime insurance and insurance currency diversification. Okay. That is, in nutshell, you can say, let's say maritime insurance. Okay. And now let me share my slide real quick on this one. Okay. There it is. So nearly 90% of the global trade moves by sea. Every oil tanker, grain shipment, container ship, any manufactured cargo, metal cargo, they all need what? Marine insurance, war risk coverage, tanker liability protection, cargo insurance, reinsurance. And the center of that system is where? Still in London, because London was the first one who started doing these things in the modern world. Okay. Especially Lloyd's of London. Now, here's the interesting part, that Lloyd's of London is in London and it is governed by the London government and all that. But still, they still sell all that insurance in dollar. They don't use pound. Think about it this way. That's how powerful dollar is. Okay. And global marine insurance market is worth 35 to 40 billion dollars annually. And its real strategic importance is far bigger than we know. And now, why I am saying all this? Just recently, India launched its own marine insurance, and India included Russian companies into it. And I predicted in that thing, that in that video, I made a video on it. Okay. And I have predicted that sooner or later, what's going to happen is that uh, BRICS countries may end up actually adding each other in their individual insurance policies. They may start providing their own marine insurance. They may actually, if not much, BRICS may not do a lots of things, but BRICS may definitely, the way I'm seeing it, is that BRICS countries may end up uh, cooperating on the maritime security. Simply because, see, why I am saying this, okay? And this is going to be a little bit off topic, okay? Not off topic, but yeah, just to explain you. Because the way insecurities are being created, risks are being created, conjured. eh, Look at the Strait of Hormuz, what's happening there, right? What's the guarantee that this type of thing is not going to happen anywhere else? Why? Because previously United States controlled all the choke points, but all that control is slowly and slowly moving away as countries, regional powers, the other great powers becoming more and more powerful, and they start to take more and more control of their territory, their territorial waters and all that, and they start to collaborate with the regional powers. Like for example, in the Indian Ocean, India starts to collaborate with Indonesia. Otherwise, US was entering in Strait of Malacca too, but over there India played some game, and that plan is gone now. Okay, so what's the guarantee of all that? Only way to stop this type of risk conjuring thing is by joining hands and controlling the ocean, and provide the maritime security in their local waters, wherever that is. So I think that maritime insurance will become important, and BRICS may introduce its own joint maritime insurance, and they may probably come up with a maritime security framework too. There has been talks on this by BRICS countries, but if it's going to happen or not, only time will tell. But my prediction is it will happen. Okay. So coming back to the marine insurance. So now you know that if you control maritime insurance, what happens? You influence the global trade itself. Why? Because uh, all that is in dollar, and 90% of the trade moves through what? Through water. The Brent crude that you see, Brent pricing, the crude pricing is mainly for the crude that moves through the ocean. Okay, just so you know. And most of these contracts are still priced in dollars. That means that if countries try non-dollar trade, shipping risks often still flows through dollar structures. You realize this? So now imagine this changes. Imagine that insurance premiums priced in multiple currencies, right? Tanker risk coverage diversified beyond dollar only systems, or reinsurance structures built outside traditional London markets. And India has done that through its own BMI, that's called Bharat Maritime Insurance. Okay, I'll put the link of that video down below. Okay, so do check it out. So that what will that do? It will change the freight pricing, it will change the shipping finance, it will change the cargo risks, it will change the energy transport economics. Why? Because using the dollar costs you extra, but when you are doing providing your own insurance to your traders and all that, then you can actually do that at a much cheaper rate, which means that it's going to keep the prices down. Okay, and this whole thing is called plumbing actually, and then whoever basically controls the plumbing controls the system. Okay, so this is how much work is needed in order to really take down the dollar. It's not gonna be that easy task. All right, so let's move on to the next one. And the fourth weakness is the most important long term one. I talked about this briefly earlier. Okay, that is dollar reserve recycling breakdown, or dollar reserve recycling. Let me share my screen real quick. Okay, see, this is actually the real petrodollar loop. Step 1 is countries sell oil, gas and commodities and earn US dollars. Step 2 is instead of leaving that money idle, they recycle those dollars into US Treasury bond, US bank, US equity, debt markets, central bank dollar reserves, and all that. right? So all that goes back into what? All that money goes back into the US financial infrastructure. And this is why dollar system is so powerful. And this is why the US stock market and all that, security market, bonds, all that cumulative is $60 trillion. So what happens in nutshell? The world earns dollars and then sends those dollars right back into America. The best example is like Saudi Arabia sells oil, they earn the dollar, and then what they do? They use that dollar to buy US treasuries. So what does it do in return? It helps in what? Strengthening the US borrowing power, treasury market depth. Then it completely strengthens the global reserve trust, right? Then of course strengthens the American financial dominance, right? So all these things are done. That's how actually dollar recycling actually helps the system. So let's say foreign investors hold roughly what, $8 trillion in US treasury securities. And oil exporting states have historically been what, the major part of that, the cycle. And what happens is major exporters, what they do, they starts to uh, move the capital into gold, sovereign wealth funds. You might have heard the news just recently that Saudi Arabia is deciding to withdraw the sovereign wealth fund from the US markets and this and that, right? Then local currencies reserve, then regional reserve assets and all that. All these things are done. And all that comes from what? Middle East. And if you look into it, then this is the primary reason that spooked Israelis. Now, some of you will be like, what? Yes. Now, think about it this way. Okay. The world's most powerful country that has been protecting you all this time, all of a sudden, its economy becomes slave to the Middle East. Why? Because all the Middle Eastern companies are investing in pretty much everything, you name it, from the Hollywood to news agencies to senators, congressmen, to stock market, bond market, businesses, you name it. Which means that they're buying the influence in the United States. I mean, lots of Democrats are already. Why do you think lots of Democrats are opposing President Trump again in this whole Iran war? They're saying, "Oh, Israeli lobby, Israeli lobby," and that is Israeli fear from the get go. That the thing that Israelis were doing back in the day, what they did, they bought the U.S. influence through the money that they had from Rothschild and all that. Think about it, okay? And so Israelis bought all that influence, and now that is actually they're getting to taste the medicine. They're getting the taste of their own medicine right now. Why? All other Middle Eastern companies, they are now dumping that money and buying the US influence against Israel. So Israel's game plan was very simple. Okay? Game plan was just conjure something out of thin air and attack Iran. In return, what Iran will do? Iran will simply go and attack all the Middle Eastern countries. And Iran itself is going to block the Strait of Hormuz so that all the natural gas supply, all the oil supply, everything will be blocked, meaning that all these Middle Eastern countries won't be able to sell anything. That's going to what? That's going to cripple their economy. Israel's very plan was just to cripple the Middle Eastern economy. Okay? Israel's primary goal is not Iran. Forget about it. Iran's economy is already gone. So Iran, whatever is Iran, it's there. That's fine. But I mean, strategically, if you think about it, Why would Israel go after Iran? How is that even strategically a very good move? I mean, all the Middle Eastern countries already hate Iran. So why would you want to go after Iran? Your danger is with the Middle Eastern country, other Middle Eastern countries that have actually attacked you. Historically, Iran never attacked Israelis. So why are Israelis after Iran? Some of you like, oh, for the oil. Come on, guys. They are not after Israelis, and Israelis don't give a rat's ass about oil. Simply because they cannot go and refine all that oil. They don't have all that capacity. They don't have anything. If they wanted oil, Syria is right next to them. Syria has all. They could have easily captured Syria. They can't do that. They never cared about oil in Syria. They already have all these Middle Eastern countries. The reason is very simple. What I told you. The plan was Iran will back all these countries, dismantle their whole financial infrastructure, their oil infrastructure and all that, and it will weaken them. And Israel is not going to lose its influence in the US. And while they do all that, they can come up with a long-term plan, because lots of things happen behind the scenes. And one of those things is that US has been withdrawing lots and lots of support for Israel. They have been thinking about basically ending all the financial aid to Israel too. So now you see what's going on. So this war is not going to end anytime soon. Some of you are like, what? Yes, this war is not going to end until the financial infrastructure of the Middle East is completely dismantled. Okay? That's the word. Now, sooner that happens, sooner war will be over. I can give this to you in writing right now. Okay? I made a detailed video on this. So I will post that link too. You can go check it out. Okay? But anyways, it came down to dollar recycling, and also I was like, okay, let me explain you how this whole thing is, what dollar recycling has done. That dollar recycling has basically bought the influence, the most powerful country's influence. So after the Iran war, it may not be the most powerful country after all. Okay. And the last weakness is structural. And that is that BRICS becomes a European Union style trade bloc. That is BRICS becoming a true economic bloc instead of just a political forum. See, if you look into it, that right now BRICS is mostly a diplomatic platform. Let me share my slide real quick, okay? So BRICS is literally a diplomatic platform. It talks more than it integrates. Okay, that's why it cannot challenge the dollar yet. It's all just talk. There is no common settlement mechanism. There is no coordinated reserve pooling or anything. And you can look into the numbers and all too. Now, but if BRICS evolves into something closer to European Union style economic architecture, then the equation will change. What happened with European? What happened with the European Union style architecture? Oh, what's so special about it? See, last time US foreign exchange reserve was 72% in 2000 at that time. Okay, and that was the time when euro actually came into being. And that was the time when Saddam Hussein was back, because Saddam Hussein started to sell the oil in euro. And from 72% after the dawn of euro, dollar went down by 15%, 15%, some, and then rest went into gold or something else in national currency, sanctions, and all that happened. Okay, that is barely 1%, give take, but major chunk came down because of the euro, that is 15%. And after that, since year 2000, dollar has been pretty stable as far as forex reserve share is concerned, it's at 57-58%. Okay. This is why I said that if BRICS becomes a well integrated economic bloc like European Union, then BRICS can definitely take down the dollar. And for that, they will need something called BRICS currency. Now imagine trading in BRICS currency, common trade settlement mechanism, coordinated reserve pooling. And actually, let me share my slide here real quick. Okay? Then large scale local currency trade, integrated development finance, energy contracts standardized outside the dollar dependence, and preferably BRICS currency. Right? All that. And this creates what? This creates a pattern. This creates a habit of trading in non-dollar currency. So if BRICS had created BRICS currency, very tightly integrated BRICS currency system like Euro did. But Euro, see, lots of people think that all out of the blue, Euro just came into being and took down dollar 15% dollar share and this and that. No, actually, it took 40 years for European Union to come up with this whole entire tight-knit mechanism and the common currency. Okay, it took 40 some years. So for BRICS, was formed in 2006, and it's just 20 years. Now BRICS will have to do something like this in order to BRICS alone to take down the dollar. So this is why I was saying that it takes a lot, right? BRICS bloc, they say all these things about BRICS bloc, but BRICS bloc itself doesn't want to create a parallel system to counter this whole thing. And what's interesting is that they know that thing. They know that if they want to take down the dollar, that's what is needed. That's why President Putin said that BRICS currency may not happen in our lifetime. Okay, that's how it all works, guys. So this is it for this video, guys. Please do like and subscribe. I hope you enjoyed the video.